Hello, everybody. Welcome to our next session here, where we're talking with the great folks from U.S. Capital. We have Charles and Ryan with us at the moment, and we may be joined shortly by some others. But regardless of whether we're joined by others or not, I'm going to warn everybody in advance that because this industry is near and dear to my heart, we're sort of in related businesses. There is a very serious danger that we run off on crazy tangents and go too deep on topics that are esoteric and irrelevant. I'll try and avoid that, but no promises. So, Charles, why don't you start things off? I mean, I know you guys have your fingers in a lot of pies. Uh, Maybe give people like a 2-3 minute, a little kind of an elevator pitch on U.S. Capital in general, and then talk about what you're seeing, kind of at a macro level with capital flows, and we can go from there and do what we can with the next 30 minutes.
Oh, perfect. Oh, here's Jeff too. He just joined.
I'll give you a quick
Excellent.
pick, but that's all you get because I'm at the airport.
No worries, no worries.
Getting away from Davos.
Oh, you're leaving Davos? Okay, good plan. That's an excellent plan. I
Leaving
approve.
Geneva. All righty.
Yeah. So, Jeff, I don't know if you heard what I was just teeing up for Charles, and if you want to take that, or if you want him to just lead off. How do we want to? Whatever you guys wish to do.
Go ahead, Charles. You heard it. I didn't. I'll just.
Okay.
Yeah, no, I mean, basically, background U.S. Capital, we are a middle market private financial group with global reach based in the United States. We focus on private markets, that is credit and equity transactions. And the private markets, our discipline is size. So in terms of size, $5 million minimum up to $1 billion.
What's our discipline? Our discipline. If it was easy, it'd be done already.
That's right, right. But I'd say industry and regionally agnostic. We have transactions in Japan. We have transactions in Mexico and LATAM and Europe and the Middle East,
Singapore, Middle
Singapore,
East, London,
South Africa.
Greece.
So our reach is very deep. And our industries, I mean, we just co-hosted JP Morgan Healthcare closing conference. A quarter of transactions are related directly or indirectly to healthcare, but also cybersecurity, deep tech, infrastructure, real estate, a huge chunk of our transactions. A lot of you got the boring vanilla multifamily real estate to infrastructure, data centers, industrials, right? A lot of industrials are being very much rebuilt or renovated or new builds. So those are the transactions we're doing. We're doing it in partnership mostly with family offices. Those are the sponsors we work with. And family offices are led primarily by first generation founders. Sometimes there are second generation founders we do work with too, or third generation founders that have taken the legacy of their family offices to new altitudes, right? And not just in, let's say, what we've heard in the charitable space or the impact space, but also fundamentally in technology. Huh? Oh, I think you're speaking, Jeff.
No, I wasn't speaking. Might be background noise.
Oh, I see.
Yeah.
Now, so that's U.S. Capital.
Get to the fun part, Charles.
Now that's the U.S. Capital.
That's pretty serious.
Then Chris over here asks a serious question. He's like, well, on a macro level, what are you guys looking at? What are you guys seeing of the capital flows here?
I mean, I'm happy to take it the fun direction too. If we'd rather go there, because I'm all about the fun. We could talk about how data centers are eating all the world's water supply. Yes, they're not, but
What about Greenland?
we could talk
I'm
about
just
rare
kidding.
earth minerals in Greenland, 100%.
Just kidding. But anyways, look, I'm the founder of the company. I come out of a aerospace manufacturing background. We had a large Southern California aerospace manufacturing company I took over for the family, ran it for 15 or 20 years. It seemed like longer than that. Sold it in the mid 90s. I had a big sailboat. I sailed around South Pacific for a while. Came back, bought U.S. Capital, which was an equipment leasing company. Started growing it from 98 up to, Charles, when did you join?
2003.
You were 12 years old?
Yeah,
Uh,
I still look it. I got a great
so
dermatologist, Jeff.
that's right. So anyway, then Charles joined in 2003, and we sold the leasing company, just built a merchant bank over the last
Mhm.
25 plus years. And then Charles has been there the whole time. I mean, he's kind of we're talking. This is about partnerships, right? More or less.
Yes, founders. Yeah.
Well, I was giving it some thought, which is kind of my job, and I was thinking about partnerships. I think there's two kinds. There's Charlie Munger and Warren Buffett, same generation, kind of brothers, right? Then you have kind of the mentor, the teacher student partnership, which is what Charles is of that genre because he started young. Now he's a full partner. Now I consider him a co-founder. Okay, so I think that's the two different things. And Charles is in that category. Both are really good. If you have kind of a mentor student, you're building in a succession plan. Is if you have a brother partner, one of them passes away, like Coach Charlie there, and then you got succession issues. So I like that mentor student, and I bet you the student, or what do they say? It's really good. Eventually, the student kills the teacher, right? But the teacher's going to die anyway. So if you're a really good teacher and you're a really good student, you end up running the whole show after, right? I think that's what that means. And that's the
Yeah,
situation we're in.
yeah. I mean, it really is a story as old as the written record anyway. I mean, Socrates and Plato and Aristotle running straight in that line. And Jeff, we do hope you don't drink the hemlock anytime soon, as much as we like Charles. So, stay with us for a while. But definitely, you're right. There are different kinds of partnership, and having that field of succession is important in any business like yours, of course. Any founder's business where you're going to help with the transaction around them to let them take their business to the next level. With the family offices, your partners themselves, and as Charles was saying, mostly kind of first generation founders, but sometimes second or third as they've passed the torch onward. And relationships, I think, are critical at all stages and in all aspects. So
Well,
maybe you
I
guys
think
could.
you nailed it there. If you understand partnership, whether it's partnership or
Are we? I think we're losing Jeff to the airport
I think
Wi-Fi, or
we
is
are
that
you
just
losing
understand a
him.
me?
Yeah.
relationship.
Yeah.
Yeah.
You understand a relationship, you understand the business. And in fact, we're really a multi-generational firm. We're not for sale. We're not going to go public. So people can relate to that because it shows long-term. Whoops, get back out in a minute. Can you hear me?
Yeah,
Yeah.
you're good for the moment. Yeah, or maybe not. I
Yeah.
thought we were good for the moment.
I thought we were too. Oh,
Uh,
he brought up quite a few interesting points, actually. I mean, regarding succession, there was I think Bank of America had this whole study. It was late last year. U.S. Trust, which is the private client services of B of A. Oh, now,
no.
no, you're coming in now.
Yeah, I suspect it's the Geneva Airport Wi-Fi. Too
Probably.
many, too many Davos people eating up the bandwidth.
I think Starlink's gonna I think he's gonna combust over there. I think Starlink's gonna combust over there.
Yeah, well, I think it's a little unfortunate because, of course, everybody would love to hear from Jeff as the founder of the organization, but until he gets that Wi-Fi resolved, maybe you just keep running with. You were about to say, Charles, that
No, so
that
no,
Jeff had made some interesting points, and you were going to riff on
there
that
was
a little bit.
there
Yeah.
yeah, there's a statistic around I think it was over 60% of family offices are going to go through what they say leadership transition, like around succession planning and the governance issues. They did a survey, informal survey. I mean, I think it's like over a third are not even like they lack like formal plans. Over a third of them lack formal plans, right? Um, and that is a significant issue because when it comes to um, this new economy we're in, where it has become more very much hands-on. Technology has enabled founders and leaders to be hands-on
Mhm.
enterprises, which is
Mhm.
more powerful than previously, right? Now that power now, when it comes to succession planning, that is becoming more and more relevant and matters significantly, given that founders have hands-on. Like imagine, let's just take even in politics, you have political leaders where there's concentrated power, right? If
Mhm.
it's concentrated power in democracies or old world, or whatever. Oh, there is Jeff. You're back.
I may be back here.
Oh, this is good. That's a
You
great
may be back. That
connection.
sounds great for the moment.
Oh,
Yeah,
that sounds
excellent.
great. Oh, look we're getting a video too. It's dark
So,
though.
so I'm back in London now. So,
Oh, perfect.
Oh, beautiful.
but anyway, I was
Quick
laughing
flight deck.
because I was thinking about that serious Charles being serious. See, that's a young man's burden. It comes a point, an inflection point, where when you're young and smart and successful, you have to be seem serious, right? Then you get
Mhm.
old and experienced, and you don't have to do that anymore. So it's a weird transition for part young guys to move into their mature phase, kind of drop those tools that they used when they were young, and kind of take on the mantle of a senior guy. Like sadly, Charles is a senior guy now.
Well, and that's actually a really interesting point because, and while you were off, Charles was talking a little bit about, the open questions and succession planning for a lot of family offices, particularly the newer ones, particularly the ones with hands-on entrepreneurs. And to the point you just made, we're actually seeing a lot of kind of the opposite, right? Where the second or third generations in the family office have been out having a good time, having fun, not being so serious, and now they're being asked to take up the serious mantle and actually run things, which is kind of the flip side of the coin of exactly what you just described. I think both things are true.
Yeah,
No, terrible
well, I
leap.
mean, Charles he's come up through the school of hard knocks, like all of us or a lot of us did. But if you came up on the softer side, it is a different pathway to guardianship of the ship, so to speak. You know what I mean?
Well,
Mhm.
that's the difference
Yeah.
between old world money and new world, right? I mean, new world money is just they're gonna invest it or spend it so fast it could go. Old world money has already built in advisors and succession planning culturally, right? Like in India, we work with a few royal families over there. They culturally have what you call Brahmins and priests and gurus. So there's these sages that surround the great family offices that do plan for excellence. So then you see that with the Ambani families, and you see that with some of the Indian families. They have that in place.
Mhm.
While in the United States, you could have a mix of goofballs, New World or Old World. Jeff
Well,
and I
Yeah,
there's
and the
that.
new world.
Huh?
I was just going to
No, go
say
ahead.
with
Go ahead.
that, you see now if you have a multi-generational firm and you've got guys like Charles that can relate to the young bucks that are coming up in the family office, right? Because they're kind of Charles generation, they can relate. And then you got the seasoned guys like me who maybe can relate to the founders and things like that. So then you get into what our culture is. I call it punks and pensioners, right? Because we really respect young, intelligent, ambitious people with integrity, and then move up in the firm. And there's a certain respect for the seasoned, guys that have experience and maybe seen a few ups and downs. And so there's that mutual cross generational respect, which builds a stronger firm. If you have too many pensioners, not going to be that successful. Too many punks, probably also not going to be that successful. But when you put those both together, it's a very powerful combination.
Yes.
Yeah, I totally agree. I totally agree. Uh, and not to get too much into the weeds, but also to kind of make it a little more real. So, Charles, you started off by describing your global perspective and your industry agnosticism inside of U.S. Capital. Yeah, I'm curious how you guys make that play out, given sort of the old farts and the young bucks paradigm. Because our experience at IDAP is, we're global, we're largely industry agnostic, but the reality is, to make deals effectively, we feel you need to have kind of deep connection and expertise in a given geo and in a given sector. Like, it's very hard to decide what is a good energy deal in Ukraine if you don't understand Ukraine, you don't understand energy. So, how big are you guys when you say you're global and have all these industries? Do you have 50 heads of office running across a matrix organization, or
Very good question. Yeah, we have over 50, we have over 50 professionals, seasoned professionals with over 4 decades of transaction and or entrepreneurial direct operational experience. So that's a very key difference, I'd say, than other investment banks that may have, they'll have a deep bench, but there'll be a lot of analysts and associates handling the transactions. We do have vertical expertise and on the ground professionals. So
Well, we won't open an office unless we have indigenous bankers.
yes,
yeah,
very,
Because
very important.
culture matters.
Yes.
But
100%,
culture matters
100%.
and diplomacy matters. So, you can bridge a lot of cultural gaps with proper diplomacy. And
Yeah, just
at
look
the
at
end of the day,
Greenland. Oh,
investment
sorry.
bankers, yeah, at the end of the day, well, you got, and deal making is multicultural.
Yes, it is. Yes, it is. So speaking of culture and kind of coming back to the mentor mentee thing, you know, one of the things I learned very early on was that culture does matter. And you saw in Silicon Valley lots of companies in the 2000s start engineering offices in India only to have them fail miserably. And the ones that were all successful were the ones that had local management that they trusted on the ground that could bridge that cultural gap. But
That's
then
right.
the connector is, how do you plug that person, that leader in your local office, into your corporate culture? How do you make them part of your family so that it's not just a random bank that you happen to own, but actually part of the U.S. Capital team? Like, what's that process, or
You
how
have
do
to
you
go
make sure
hang
you
out
do
with
that?
them. You have to go hang
You,
out with them. That's
you
why.
got
That's
you got to give them the association.
that's
We're,
why my office is seat 2K on Emirates.
Mm, yeah.
Yeah, yeah, and it's not a manual or handbook. It's flesh to flesh kind of connection. That you have to make that connection. It's
You got
it's
to show
pretty
up.
it's pretty raw. So both Jeff and I are making those raw connections in person. We were actually the only professionals, I'd say, early on in the last 5, 6 years to travel the way we do in regions that people were just shocked. Jeff was over there in the Middle East before it became like now. Yeah, everybody's there now, right? We're discussing certain regions, which we can't disclose over here, but in East Asia, as an example, that are, or in Asia or in Central Europe, right? I could say, I mean, look, Turkey,
Hmm.
Armenia, right? We have deep relationships in those regions, and we are familiar with families in those regions and making those connections deep, right? Not just at the cafes or restaurants or at a social club, but at weddings. And that showcases that we're deeply integrated culturally also, right?
Well, we're a forward-looking firm, so you want to start developing a relationship while they're still shooting, because the shooting will stop, and when it stops, there'll be a lot of trade. Whether it's Ukraine or this Israeli conflict, you don't have to be on one side. We're diplomats, right? We're not trading one side or the other, or even illegally trading when you can't. But you could certainly be anticipating when conflicts end. You want to be there and you want to have relationships in the end, because a lot of growth happens and it's really necessary for society to rebuild. And you can't really be afraid. You have to be forward looking. which we
Yeah,
are.
I couldn't agree more. I mean, that's, we've been in Ukraine since 2001 for exactly that reason.
There you
Um,
go.
yeah, yeah, that makes a ton of sense. Ton of sense.
I guess we have to open an
So, all right,
office in
we are.
England.
Well, yeah, that's next on the list, I guess. It's that's an exciting ancient Chinese curse, right? May you live in interesting times.
I was
Um,
talking to a Norwegian friend of mine the other day today, and I just said I remember that old phrase, "Might makes right." I thought, wow, I hadn't
yeah,
thought of that for a long
yeah,
time, but
yeah.
it's
It is
becoming
true.
more prominent. Well, go ahead. You were going to wrap it up, I think.
It is. Well, I was because we only have 3 minutes left of the clock here, so I wanted you guys to, this is great insight, and they're really, I think, key points that I think the kind of stuff that we've been talking about here is the kind of stuff that when people hear it, they're like, "Oh, that makes sense." It just resonates. It's not something you have to deep dive into and like double check. Does this make sense? Is this a real thing? No, of course. This is the way the world works, and sometimes somebody just has to say it out loud, to articulate it, and build it into the rubric by which they guide their corporations and their relationships and their customers and their employees. Uh, but all of that said, we have a huge audience here watching you guys. We have a few hundred people directly in the Zoom call, and then often about 50,000 at any given point in time watching these things. And so, your call. If any last bit of advice you want to give to those people watching, or conversely, how can our audience help you? What do you guys need? How can we bring our people to help you continue your vision and your mission?
I would say just don't be fearful. Stay positive, move forward. Really, that's really what we do, and build relationships. Be diplomatic. Respect other cultures. Respect your counterparty. And things will work out just fine for you.
Yeah, yeah. I'd say, and
Charles?
I'd like to echo what Jeff said, and then really what we would like to expand more into is, um, there's a lot of deal professionals out there that are either employed at the bulge bracket banks that are looking to break away and establish their own houses. And we are a great platform where we're not seeking one liquidity event. We are seeking liquidity events every quarter.
Mhm.
Right. Let's do it in a great partnership.
Well, I think that's true. Last thing I want to say is we have a massive referral network, and we respect the advisors in the industry like
Yes.
nobody else does. It's a
Yes.
unique feature of ours.
Yeah.
And so I think that people will find that we make sure everybody gets paid, they're respected, and I think a lot of the issuers and even capital sources maybe they don't have as much respect for the intermediaries as they should. We do, and
Yeah. We work with
yeah,
a lot of
Yeah.
financial consultancy firms, boutique investment banks with maybe 2, 5 professionals. And sometimes those 2, 5 professionals, we work with them so well after 2, 3, 4 years, they become a partner,
they
right?
join us. Yeah,
Yeah, they
Yeah.
join the platform. So that's very powerful. I'd like to expand that.
yeah. So
Awesome. Awesome. Well, thank you, gentlemen.
reach
This has
out.
been really beautiful. Look forward to speaking to you both in the future, and all the best in 2025, and may your journey be successful.
Thanks,
Thanks,
Chris.
Chris. We're grateful for the opportunity. Thank you.
All right. See ya.